So, you know the phrase that all gaps get filled in time? Well, the NASDAQ is no exception today. We actually filled another gap and started progressing to some more. So, I've always been saying on this channel, all gaps get filled in time. It just may take a while to get there. Even that dang COVID gap that we have down sitting there in time will get filled. And we may be on the precipice of maybe starting the trend down there. However, there is some evidence that I'm going to be talking today about that, well, maybe to the contrary, maybe to the Bulls team and to a general theory about the market is the mechanism for taking the most amount of money from the most amount of people in the fastest time possible. And something very crucial actually flipped today. Not only did the market flip on its head, something very crucial actually flipped, and we'll be going over that and more, giving you guys the recap. Hope you're having a wonderful start to your Saturday and kicking back, relaxing, and we'll go over everything that you missed during the week, where we're looking for, and kind of give you that big general overview, and then give you the weekend deep dive tomorrow. So make sure you guys have the subscribe button enabled and bell notifications as well, so you know when that goes live. And if you would not mind hitting the like button, it always helps us out. Well, without further ado, let's talk about the NASDAQ. Well, there is no level that I can write here that the NASDAQ apparently does not want to violate. We violated 433 at the beginning of the week. We violated 425. And now we have basically violated 416. So it's just blowing through every single support, mainly led by the big caps, right? So if we pull up a heat map, we can see that, well, frankly, that it's simply rotation. And we know this by, if we jump over to RSP. RSP was green. And along with that, the Dow, right? So the Dow actually looking like it's either one of two things. And this is why I say that we're starting to see evidence to the contrary of the bearish theory. As we see here, this could be a bear flag, or this is the start of a bottom forming, and then we could start the rotation back up higher. However, for the Dow, we're going to need to get above 380.0 for DIA specifically. And for RSP, we're going to need to do basically a very similar story of 161.94, or really S&P to stop going down would be the thing. Now, this could be the second leg of the capitulation phase, where we really haven't seen that massive volume ramp in these indexes. If we jump over to the S&P, we can clearly see that we're starting to get some increase in volume, but nothing actually out of the ordinary on the red volume days. So we're not really seeing that capitulation phase of the market. We're not really seeing mass selling. This is more indicative of rotation, where the S&P and NASDAQ are compromised of more than basically mega cap stocks. 7 stocks consist of 35% of the S&P, meaning that when they sell off, it takes a huge chunk with it. So let's just quickly review where we could find support on the S&P if we're looking at it, right? And simply put it, we're in no man's land right now. On the NASDAQ, on the S&P, if we look at this rally, right, let's just draw a simple Fibonacci retracement right here, that from peak to trough, we're just at the 23% retracement. We're not even at the 38% retracement, where we sometimes find bounces. And coincidentally, this is so coincidence, guys, where do we find the 200? Smack dab sitting right at the 50% retracement that the S&P is so famous for doing. The S&P literally retraces 50% of the move a lot of the times. And if we look, we get a 10% correction once a year. So 10% or 11% approximately, 200-day moving average, bounce off the 200, and away we go. So if we get all the bearishness out of the market during this phase, and we bounce off the 200 with some momentum and start tackling this upper price actions, well, why would you be complaining about a 10% sell-off when you can basically buy everything for 11%, right? Everyone talks about how stocks are expensive, and when they give you a discount and you're not buying, right? Where's this confusion coming? Or we find out if the crash leg is really there, and then we start breaking more and more support. As you saw here, what happened when we broke the 200 back in the start of the 2022 leg, right? So we break the 50, we come down, we slam down to the 200, and then just keep rejecting off of it, right? Once we got completely below it, well, that's when we started the leg down. So we're pretty much looking in this area of, Well, one, you can hedge. Two, you can go to bonds. Or three, you can just sit on your hands and wait, right? Do you basically start buying at the 470 mark? Do you start buying at the 466? That's where I'd be looking at, especially with the S&P. We do have a nice conjunction of price right here in that area. So that's where I'd be looking for a bottom. I wouldn't necessarily be looking right now for it, considering some of the things that are coming up next week, which we'll go over in a second. Now, what's the traditional thing of the market, right? Chips lead tech, tech lead SPY. So let's go take a look at chips, right? Let's look at SOXX. Well, ouch. That is a haircut like I have not seen in a while. The ETF going down 4%, mainly driven by two companies. And the first one, obviously, for all my favorite people out there, and you know exactly who you are that keeps asking me about, is it time to shorten a video? Well, today was the day, right? Today we broke down below the 50, one candle close, right? So we got to keep an eye on that, break the trend, and there is a potential gap fill on NVIDIA starting at $742. So we got another $20 before it's going to go into that gap fill. But once it goes into that gap fill, hey, I foresee us coming down all the way to 657. I don't think that we're going to really get any bullishness prior to earnings, and that 200 looking really, really interesting. Just looking at this massive expansionary move, if we just take a fib similar to it and say 61% retracement, coming back down to maybe a double bottoming around the 662 mark. So again, the gap fill is where I'd be looking to make my money on NVIDIA. If you were going to go look short prior to that, it would be a little more dangerous. Now let's take a look at another chip sector stock, and that is SMCI. So SMCI, you know, it's like, we give you money and then you say you're not going to give us the earnings report or the preliminary earning report, and everyone just says sell it. 23% down. This thing is coming down back to $500. Mark my words, this thing is going to rip everyone's face off. I said it that this looked like a penny stock, which it almost reacted exactly like a penny stock, parabolic. So we're looking at a 70% correction of this move. And where would that bring us, right? Where would that bring us? Oh, smack dab to 462, depending on where I drew that. Even let's say let's be more conservative. Oh, 507. So 507 to 460. 200-day moving average. Again, I keep going and harping on this, guys. The chips are going to drag this market down. And Tesla is hell-bent on doing it as well, along with Apple, right? Apple resoundingly closing below the lows, forming a new low, and we have a lot of bearishness in Apple. Apple is below its 200, it's below its 50. Well, the only support now is the 152 mark, and if we break that, there is not a lot of help coming for you there. Even if we say this is the 50% retracement, you're looking again back at 152. So Apple resoundingly will have to bounce there, or we're going to be dragging the market down. And let's look at its other counterpart, Microsoft. Microsoft breaking below the 50, looking very similar to the NASDAQ, and Microsoft having a even bigger move, right? So 50% retracement for Microsoft on this massive, massive move would put it right below the 200, but let's say that's not the move, right? Let's say we go back to the most recent move we got up here, 50% coinciding again with the 200-day moving average, sitting right now at $367 a share. So guys, you're starting to see a pattern here of there's bearishness, but there is a bounce point. And we got some of these earnings on deck this week. We got Google, Meta, Microsoft. So we're going to basically find out, are we going to pull JP Morgan's and Netflix, right? Netflix, good earnings, sell it, right? Coming back for that gap fill, which could potentiate even more selling in the tech sector. So we have to keep an eye on that. And the S&P and NASDAQ ain't doing any better. But the main thing I wanted to look at is some quotes we got today, and then we'll wrap it up looking at the news catalyst. What could really be spicy next week other than earnings? Obviously, earnings is going to be spicy, guys. And that mainly is Goldsby talking out of both sides. And this one, just, I love it. Consumer loan delinquencies are in an area of concern. And this says it all. Like, really? So again, that's all you have to say. Like, okay, well, we've been talking about this on this channel that everyone's poor, right? But the golden path to inflation, right? And then we have this. when asked about a possible rate hike, because now the narrative, are we going to hike? I don't think anything is not on the table. So is this contrary to what Powell said? Powell said we're done hiking rates for this cycle, and now they're walking it back the same way they walked back transitory inflation, the same way that they said soft landing. It's just getting more and more fun. And last but not least, the yield curve is still uninverted, just going sideways on itself. So yeah, that was a bonkers day. Reverse repo sitting at $397, back from its previous high that it was ticking up pretty high to 440. So again, are we going to make a new low? Is this basically going to keep churning down? There's not a lot of money left in this facility. And last but not least, we are hell-bent on getting back to that extreme greed. We were hell-bent on getting back to extreme fear. We were in extreme greed for quite some time, so we definitely could see extreme fear, especially when anything catalyzing in the market this week, especially if we jump over to oil, right? Let's just take a look at what Daddy Oil is doing, and we can clearly see that Daddy Oil wants to go higher. However, that is one hell of a middle finger candle, if I do say so myself. So are we going to see higher oil prices, oil closing green? So kind of holding that $50 DMA area, and I'll keep you guys updated. We'll talk about oil more, and then we can deep dive. So make sure you guys stay tuned for that. And thank you so much for watching. Hope you have a wonderful Saturday, and I'll see you all tomorrow.